Hello and welcome to Moneylife. This is Sucheta Dalal. Today, after a long time, I'm going to talk about cryptocurrencies and how they're spreading like MLM schemes while the government is watching in silence. Now, if you look at all the crypto advertising, if you've been watching cricket, you would have noticed that all the movie stars, cricketers, the maximum number of ads are about cryptocurrencies. And the story that's hitting you all the time is, are you missing out on what they're calling the biggest financial revolution in modern history, which will change forever the way monetary transactions are executed? Or is that true? Or are you really falling for an orchestrated sales pitch by the crypto industry, which has a lot of money and is persuading people to make risky investments? In fact, if you hear what's going on, crypto has spread all over the country, every nook and corner, and has gone down to low income groups where people are looking at this as their get rich alternative without knowing anything about it, just downloading and listening to things on social media. Now, research shows that those who plunge into uncharted territory, maybe the guys who invested in bitcoins earlier on, did make serious money. Bitcoin billionaires are an example. But a majority of ordinary people come into the party really late without understanding and jump into trying to make money based on some tips that they get from people. Today, social media makes all of it extremely easy. In fact, so big is this industry and with so much money that almost every day Moneylife receives press releases or pitches for what is called native advertising or paid posts, which is articles that are paid for by the industry, which appear like independent articles. They offer significant sums of money to us to publish them. In fact, the biggest people to offer this money is the gaming industry and the crypto industries, cryptocurrencies. While we say no to the possibility of misleading our readers and viewers, many people have no such qualms, least of all those who organize cricket matches. Remember, cricket matches and cricket boards are all controlled by politicians and their children, and they obviously feel complacent. Doesn't matter where the money comes from or who's got fooled by cryptocurrencies, they have nothing to fear. After all, they have the policymakers with them. This is clear from the government's stubborn reluctance to ban or regulate the spread of cryptocurrencies through advertisements, paid influencers, and content marketing, or to create cult-like mania, much like multi-level marketing schemes. In fact, it's hypnotic. Pyramid schemes and multi-level marketing schemes ensnare people into joining them and hard selling, even to their own relatives, without asking too many questions. Finance Ministry is watching all this silence, even as people from the industry and every sensible voice has been saying, what is going on? Why are you allowing these exaggerated returns and fake claims and so-called crypto exchanges, which talk about market capitalization? What is it based on? The silence is a tacit approval and support from our political class. Obviously, powerful politicians are behind it. In fact, if you remember, it's a long time ago that the Reserve Bank of India had already signaled its discomfort about cryptocurrencies and banned banks from holding or facilitating these currencies. What did the crypto industry do? They went to the Supreme Court and got a stay order. After that, it is tariq pe tariq. The issue isn't decided. Meanwhile, advertising has just burst like a bubble onto our faces. Social media is offering tips. It's all over WhatsApp and Twitter, and there's nobody to make a sensible assessment of what is going on. In fact, it's reached a stage where even crypto supporters are issuing full-page advertisements to say that Indians have already invested, hold your breath, 6 lakh crore in crypto assets. And they're saying, please regulate this, have a regulated environment. Of course, they make a distinction between some of us being the good guys, others being the bad guys. So distinguish the cheats from who's going to do it. A crypto maker claims that the market cap of this tokenized currency has touched 3 trillion, okay, on unregulated crypto exchanges. There is no regulator, there's no regulatory framework. A media report says 105 million investors are already invested in this digital currency. And as everybody has been saying, it is now targeting low income groups, which means that the bubble has grown so big. Any move to regulate crypto ought to be preceded by a clear framework, or maybe a white paper on, first of all, what does India stand on tokenized currency? Do we support it? Do we don't? What will be the safety? What will be the backing? Remember, paper currency is backed by the government's promise to pay and make good. And yes, when we talk about printing of paper, also, it's a sovereign decision that is there. There's might of the state is behind it. But there's nothing behind crypto. They will tell you we don't need the government. Really? I mean, we don't know whether you need it or not until things go wrong. And remember, even countries like China and Singapore, which initially supported crypto, are having second thoughts. China has even banned some of them. So crypto investors need to realize, first of all, there's no regulation. That's a big problem. Even if there were regulation, doesn't really guarantee anything, least of all protection from losses. But at least there's a framework, you can complain, there's a mechanism to investigate, and sometimes at least the bad guys get punished and caught when things go wrong. Okay. What about the judiciary? Take a few examples over the last 35 years that I've been reporting on things, and you'll know what I'm talking about. Public memory is very short. Allow me to give you a few reminders. I'm going to talk about only two big examples, the most egregious ones of the past 3 decades. It's a company called PACL, or Pearls Agro. It's a Ponzi scheme operating since 1997. It raised, believe it or not, 50,000 crore. It's not that the regulators hadn't woken up. They did. They went to court. It gamed the judicial system, got stay after stay, took a long time for things to reach the Supreme Court. Meanwhile, this family called Bangu, Nirmal Singh Bangu, had raised 50,000 crore, taken a lot of money out of India. The Supreme Court finally asked SEBI to put in place a committee headed by a former Supreme Court Chief Justice. And do you know how much money was returned by April 2021? Just 438 crore out of 50,000 crore. You want to know more? Please Google Moneylife. We have a series of articles on this. Then there is Sahara Parivar. Public memory is so short that people may not even remember how Subrata Roy of Sahara was all over the media, posing with politicians, film stars, cricketers. The cricket team wore the Sahara logo. He was larger than life. He got into trouble sometime in 2008, 9, 10. There was a case going on by the Securities and Exchange Board of India because he issued 2 debenture-like instruments and raised 15,000 crore. Now, SEBI won a landmark order from the Supreme Court in August 2012. That's 9 years ago. In the process of the Supreme Court battle, because Subrata Roy kept issuing ads and was held guilty of contempt of court and asked to pay up money, he spent 2 years in jail from 2012 onwards. Yet, while he was incarcerated and after, now he's out on bail, and he's been out on bail for the last 9 years, he managed to first of all float 4 cooperative societies across the country. Cooperative societies, by their very name and nature, are supposed to be small, tiny, localized. He managed to float 4 big ones across the country and raise 1 lakh crore. This is including the money that has been given to SEBI. SEBI itself, under the Supreme Court order, has collected from the Sahara Group 15,500 crore. Again, after Supreme Court order, with a retired Supreme Court judge presiding over matters, SEBI has been asked to distribute the money. Hardly anything. Few crores have been distributed, just about 100 out of, not the amount that he's collected, 15,500 crore that SEBI is sitting on. What does it do with it? Nothing. Just sits on the money, says, yes, we found investors, worth about 100 crores. The rest of the money is there. The big story is from November 2019, this whole Ponzi has collapsed. And Subrata Roy is no longer able to pay back investors. They're holding morchas, some have committed suicide. But in a country where this amount of money is lost, so big is his political clout even today that no parliamentarian speaks with any consistency. There is no joint parliamentary committee set up. There is no effort to pay back those investors. They are not even being heard. And Moneylife has created groups. So, two examples of what happens. Again, since public memory is short, I'm going to make one quick reminder. Another bunch of these collective investment schemes, film stars, politicians, the minute you see them, film stars, politicians, cricketers, their endorsement, raising big money, they become members of parliament, and they raised several 100 crore rupees. These are companies like Sharda. Remember the famous Sharda scam of West Bengal? Many people went to jail. Do you have any idea what money was returned? Almost nothing. MPS Greenery Alchemist had its founder in parliament. The money doesn't come back. So the lesson to remember is that all politicians have been invested in things like Sahara, but even with this kind of money collected, there is no joint parliamentary committee and no effort to investigate, extract the money and return it to people who have lost it. Doesn't matter the morchas, doesn't matter the suicides. It continues. We are trying to create a group to help them. So remember, the bottom line is that when the going is good, people get carried away by these quick rich schemes or schemes offering 3 to 4% higher than bank fixed deposits. The endorsers are always film stars, cricketers, posing with politicians, the founders all over the place, showing that they're politically powerful. But when there are losses, doesn't matter that there are arrests and people are paraded, your money doesn't come back. So when you invest in something without a regulatory framework, keep that at the back of your mind, whether or not you're convinced. Now, let me go to the next thing, which is the crypto sales pitch. What does the crypto sales pitch say? Crypto exchanges claim that the growth of crypto assets across the globe testifies to the growing excitement over what they call decentralized finance. That means no government deciding things, and non-fungible tokens and meme coins. The pitch was probably the same during the tulip mania, the South Sea bubble of the 18th century, tulip mania 17th century, the dot-com bubble 21st century, at the turn of the 21st century. And I'm not even talking about the global financial crisis and the kind of toxic derivatives that led to a worldwide problem. This at least should be in public memory. But we have something new that's going on. In fact, anonymous decentralized tokens have been so quickly adopted by organized crime, terrorist organizations. They love the anonymity, the lack of transparency, the lack of government involvement. They hardly make this the bright new hope of the future. In fact, there are inherent contradictions about crypto claims, which are ignored around the world, not just in India. And experts who dare speak out get attacked. In fact, listen to what Jackson Palmer says in a series of tweets in July. He's a data scientist and knows engagement marketing. It's based in San Francisco. He says, first, one tweet, after years of studying it, I believe that cryptocurrency is inherently right-wing, hyper-capitalist technology built primarily to amplify the wealth of its proponents through a combination of tax avoidance, diminished regulatory oversight, and artificially enforced scarcity. Yes, scarcity. Who minds them is a question mark. Further says, it takes the worst part of today's capitalist system, which is corruption, fraud, and inequality, and uses software to technically limit the use of interventions, which is audits, regulation, and taxation, which serve as a protection or safety net for the average person. So these protections are meant to benefit us ordinary taxpayers. The crypto industry, by and large, doesn't want any of it. And contrary to claims of decentralization, which is do away with government, we don't need government interference, we'll create our own currency, Palmer says the crypto industry is in fact controlled by a powerful cartel of very wealthy figures who with time have evolved to incorporate many of the same institutions tied to existing centralized financial systems, which they are out to replace, which is why they want governments to have cryptocurrency. Last bit explains the push to legitimize and regulate cryptos, even when there is no clarity on risk, issuance, and risk mitigation. Now, while the crypto industry is pushing for regulation, Some like Sudhir Mehta of Pinnacle Industries, who's also president of a Chamber of Commerce in Pune, the Maratha Chamber of Commerce and Industries and Agriculture, goes as far as calling it unregulated gambling. This is in his tweet. He says it targets low-income groups with get-rich schemes, and allowing self-regulation of cryptos will cost millions of Indians their livelihood. While cryptos are allowed to run amok, he says, manufacturing continues to be shackled by over-regulation that includes inane but extortive laws like whitewashing of toilets, which are also fully tied. Imagine the difference. People love it because there's no regulation. That also makes it so dangerous. In fact, crypto bubbles and frauds have been surfacing with regularity. It's not that it doesn't happen, but because most of what you read is paid, as I said, sponsored posts, these appear in some kind of digital media with lower circulations. You need to search for them, Google media posts of sane thinking people. Otherwise, they're just drowned out. You need to work at finding the frauds and losses and things that evaporate in the middle of all the marketing blitz and paid coverage. Clearly, if you ask me, cryptos are an unknown territory, an experiment, which at best you should restrict to money that you can afford to lose without whining. It is surplus money. You're putting it aside. If you get rich, great. Don't whine if you lose it. It's like gambling. Now, let me end by quoting the same Mr. Jackson, because I know what your reactions are going to be to this video blog. He says that the discussion around cryptos is so lopsided these days that even the most modest critique of cryptocurrency will draw smears from powerful figures who control the industry and the ire of retail investors who have been sold the false promise of one day being a fellow billionaire. Good faith debate is nearly impossible. I expect a similar hysterical and motivated response to this column as well. In fact, if you look at the printed column, you see it already. So criticize by all means, as long as you also somewhere at the back of your mind pay attention to what I'm saying and remember lessons from the past. Like this, pass it on. Thank you so much.